Hello and welcome to an all-new episode of the Bitcoin News Show, the 100th episode, ladies and gentlemen, of the Bitcoin News Show. Kind of hard to believe that we are here, but we are here, and we are screen sharing CryptoCast.network right here on the website here, guys. You can check that out. We have our YouTube, iTunes, Instagram, RSS, and audio feeds for you guys to listen to. We also have, of course, our merchandise if you guys want to support the channel. And if you really want to support the channel, we are screen sharing our QR code right here because this is a community-supported YouTube channel. So we very much support all of the tips and feedback we get from you guys. We actually just got a few tips recently. So again, thank you guys so much to whoever that is. Really appreciate it. Really keeps us going. And then also we got the big, huge conference, guys, coming to Las Vegas. Nevada Tones Conference is here. It's only a week away. It's really excited. January 24th through 26th. A lot of people are going to be there. A lot of Bitcoiners are going to be there. The poker tournament sold out. The carnivore dinner sold out, and just put up the schedule of the actual conference day. So it's going to be a big day, a lot of Bitcoin talk, a lot of good stuff. All the Bitcoiners are going to be there, of course. Tone Vase, Jimmy Song, Safe, Max Kaiser, Peter Todd, Trace Mayer, Giacomo, all the bunch of Bitcoins. Of course, even somebody on the conference today, the show today will be there, Mr. Murad. But we don't want to spoil too much. So a lot of good stuff coming, guys. There's still 11 tickets left at 0.1 if you guys want to check that out. But really cool. So with that aside, let's stop the screen share, get right into the quick bit section, and then we'll introduce our guest, guys. So a lot of stuff to talk about real quick. Let's get right to it. We got Overstock's Mr. Patrick Byrne. Got to give a shout out to Patrick, of course. One of the first people to take Bitcoin on Overstock.com over there. He is launching his tZERO platform next week. I think it's going to be a little bit interesting to follow. It's going to be, his whole thing was trying to bring down Wall Street, right? To try to bring transparency to Wall Street. So this is a decade plus long quest for Patrick. So we really wish them the best as he's trying to take this on, trying to almost single-handedly take on Wall Street. So we wish him the best with that. And then next we got the price volatility, guys, in Bitcoin is down 98% year to year, according to this article here. You guys got to check that out. We see year over year, we see the Bitcoin volatility be reduced from the very beginning as more and more liquidity gets introduced to the system. And then we have the Bitcoin node count has stabilized, guys, back up over 10,000 reachable nodes. So that is really great. We have a lot of great hardware nodes that are being put out into the space right now. Of course, we got the Casa node, but then we got the Nodl node and a bunch more. Some Lightning nodes are coming out, guys. So really great time to start experimenting with Bitcoin and Lightning as these really affordable hardware comes pre-installed with everything you need, starts to come out more and more. So that's really great. And then we got the this is a good one, guys. The Bitcoin mining continues to get more decentralized as Bitmain loses dominance. So we see, in the last couple of days, last few weeks, we've seen that the mining distribution be really distributed. We see almost no miner taking up more than 10-15%. So it's really great to see. It used to be pretty touch and go there for a while with Bitmain, but as always in Bitcoin, everything comes to a equilibrium over time, thanks to all of the game theory. And then of course we have this is a really great article. There's now thousands of U.S. grocery stores that you can now sell Bitcoin at with Coinstar. Actually, Tone Vase they talked about this on his show as well. It's pretty interesting to see. But hey, if I can go to my local Coinstar and drop off all my useless fiat change, right, that's just sitting there accumulating, and I can get Bitcoin for that, that's a pretty big win. So check that out, guys. Really cool. Hopefully Coinstar rolls that out to more and more places. And then Mr. Alex Bosworth over there working on Lightning. He has a great new video. It's actually produced by Chaincode Labs, and he's talking about the Lightning channel management. A lot of good stuff because he tweets about this a lot, guys, how he has very little liquidity into the system, but yet makes a lot on routing fees. And it's all on how he does it, all these techniques. So guys, check that out if you want to learn more about running a Lightning node. Really great stuff. And then we got Jack Mallers of the Zap Lightning Wallet has put together a site for his meetup that he has over there in Chicago that allows anyone to buy some beer with Lightning. It's kind of cool because obviously we can't send beer through the internet quite yet, but he did throw out this website so that because there is some people that wanted to participate and buy a few people some beers that couldn't actually make it to the place. So he threw up a website. We can actually send some Lightning, some Bitcoin too, and buy some people some beers if that at that meetup, if that's something you guys want to do. So check that out. Pretty cool. Just Jack being Jack, guys. Really awesome stuff. Then we got Coincenter, love them or hate them, guys, but Coincenter, they continue to talk to the bureaucrats over there in Washington, and they have demonstrated today or this week the Bitcoin Lightning Network to Congress in conjunction with the Congressional Blockchain Caucus, guys. So this is kind of interesting to see. We're trying to educate more and more people, everybody, not just regulators and not just politicians, but everybody about Bitcoin and about Lightning. And I think this is just going to be a win for everybody. The more people that understand and know about Lightning, the better. And then finally, we got, I'm going to not pronounce his name right, but Jan Pritzer. I can't pronounce his last name, but he's a really great guy. He's got a brand new book out about Bitcoin entitled Inventing Bitcoin. So this is just another, it's more of a historical purpose more than an actual for a technical reference for programmers like mastering Bitcoin, but it's just another great Bitcoin book, guys. I mean, we're seeing more and more come out all the time. So I think this is just a really great win. So check that out if you guys get a chance. So with that ado, let's go ahead. With that aside, guys, let's go ahead and introduce our amazing panelists today and start talking Bitcoin. So first up, guys, we have Mr. Murad himself, cryptocurrency analyst. How you doing, Murad?
Hey, Vortex. Excited to be here. Thanks for the invite. A big fan of the show. I'm doing very well.
Awesome, man. Really glad to have you here. It's been too long, man. I don't know if I've ever had you on the show, but if I have, it's been too long. We need to get you back on here more often. So thanks, Murad, for joining, man. Really appreciate it. And I'm going to see you in Las Vegas for Tone's conference. So looking forward to seeing you there as well. Really, really cool. And then next up, we got the man himself, guys, the legend, Mr. John Carvello, industry Bitcoin veteran here. John, how you doing?
I'm doing great. How are you?
Really good, man. Glad to have you here. We're going to be talking about some stuff you're working on today. So I'm excited to do that. It's going to be good. Yeah. All right. Then we got finally Mauricio, guys, joining us for the first time on the show. CSO, co-founder of Ledin, Canada's first Bitcoin-backed lending platform. Mauricio, how you doing?
Doing great, man. It's a great day to be indoors in Canada. It's really cold.
Yeah, man. I don't know if I can do it. I don't know how you guys do it, but yeah, really great to see you on here. Of course, a friend of Francis out there in Canada. So really glad to have you on here. Francis can't make it today, but we're glad to have you on here, Mauricio.
We'll do our best.
Representing Canada, representing Bitcoin over there in Canada. So let's go ahead, guys. Let's get started with the first topic. This is pretty cool. We're going to go to John for this, but first, I want to talk about this particular product that just got released. This is a new Bit refill service that they aim to make Lightning payments easier for people. And John, you're over there at Bit refill, and you guys just launched this project called THOR. And I really like both. I really liked the article actually by Lee, Lee Kuhn that on CoinDesk that put this information out for the public. It looks like she did her research on this project that you guys are working on. There was a lot of great information on there. How about you guys have been actually running Lightning over there for a year? And so I'm sure you got a lot to share, John. So why don't you go ahead and tell us a little bit first about your guys' experience over there with Lightning, and then maybe we'll get into a little bit more about THOR.
Sure. Yeah, I joined BitRefill about 6 weeks ago, and very quickly realized that this is a company that is definitely trying to do their part to help Bitcoin and Bitcoin infrastructure. Been running the Lightning node for a while, accepting Lightning as payment for all of the products. We have, I'm going to say his name wrong, but Justin Camarena, who's a very good developer, and we have another guy named Robert, who's also very skilled with Lightning and Bitcoin technology. And so they've been working on finding ways, the whole team has been trying to find ways to basically incorporate bleeding edge, Bitcoin technology for the sake of our customers, and trying to find new ways to give products to people to be able to more easily access new Bitcoin technology. And so one of the things they came up with was THOR, which is basically a way for people to be able to have us open a custom capacity Lightning channel to any Lightning address. So this basically allows people to, whether they have any Bitcoin at all or not, it allows somebody to come to our website, purchase a channel, and they can either open it to themselves, or they can choose the custom amount of capacity, or they can gift it to a friend. So it's a great way to introduce people to Lightning. So you can basically, go to a friend and say, hey, install this wallet, use this link, and now you're on Lightning. And then they're able to receive payments. So it gives them the inbound capacity. It gives them the capability to be on the Lightning network without really much more than an app and a link.
Yeah, that's really great. I think this is going to. I'm really excited about this. Maybe not just for this specific project, but what this kind of represents to me, which is the beginning of all of these services that are going to start come online that are built on top of Lightning. I think that you could probably foresee better than me, John. But I think there's going to be a myriad of these types of services that are going to allow people to make it easier to use Lightning and to use these technologies, because obviously right now it's just so early. It really is difficult to try to have a regular person run a full node, right? So having services like this as an option, I think, is a great idea. You guys now, I think, have taken over like thousands of Lightning payments at this point, right? Over the year, do you happen to know?
Yeah, it's increasing every day almost. I think that last I checked, we were at 4% of payments received daily are through Lightning, which is actually higher on most days than any of the altcoins. It's actually double most of the altcoins. Bitcoin is still dominant as a payment method, but Lightning payments are actually starting to be more often higher than any of the altcoin payments, and double for some of the smaller altcoins as well. And yeah, as a company, we have more plans. We're trying to figure out more ways to offer people products like this and new ways to access the network, in addition to just offering gift cards and mobile refills. And also, if any of you ever have ideas or things you'd like to see that you think a centralized business could help provide, just contact me and let me know, because we are looking for more ways to do this. We were actually surprised with how many people are buying Lightning channels with us. We're actually right now, I was looking at the dev chat today and Slack for Bitrefill, and they're talking about offloading the Lightning channels for THOR onto a second node, because we're just getting to have so many just on the main node that we're going to actually be expanding the amount of Lightning channels that we're doing, and we want to make sure that everything is set up well for everybody. So it's growing. We're seeing more people use it than we thought would, and we want to keep finding new ways to offer services like this.
Awesome. And also, John, congrats on that What Bitcoin Did podcast. I listened to that recently. I encourage everybody to check that out. You actually explained some more detail about THOR in there as well. So very, very cool. Mauricio, I want to find out from you, what do you think about this type of service? What do you think about these services being built on Lightning? Is Ledin ever going to allow Lightning and integrate into their platform?
Yeah, thanks. I think of Lightning and I think of a few things, right? As a company and personally and as a company, I think of them with two different, I guess, intentions or goals. One thing that I'm really interested in the Lightning technology is the ability of doing micro payments and processing payments and transactions with lot smaller fees. And that is because, being from Venezuela, things there, as far as the piece of the transaction relative to the transfer that you're sending, in the States, even for a coffee, we think of a coffee, we think $4, which is ridiculous if you're thinking of buying a coffee in South America, right? So to the extent that these micro fees are going to help, Bitcoin be more usable in the, call it, day-to-day transactions for people outside of North America, where prices, perhaps headline prices are significantly lower than in North America. It's back in the playing field relative to the other forms of payment for down there. As a lender, one thing that I'm particularly interested in Lightning is this idea of being able to stake Bitcoin and earn a return for it. And the reason I say that is because we see Ledin as a financial services company, and we don't want to stop with Bitcoin-backed loans. We want to offer people the opportunity of perhaps earn a return on their Bitcoin, and that is a challenging exercise, because you have to generate the return with that Bitcoin with a significant or with a acceptable level of risk. So to the extent that you could do so in the Lightning Network, and we could, in a way, help clients do that, perhaps people that aren't ready to do that themselves, and we can come in and provide a vehicle for them to earn a return and control that risk. That's something that we're actively looking into.
Awesome. Just a side question for you, Mauricio. What do you think about exchanges adopting Lightning? Do you think that that's going to be happening anytime soon?
I mean, I would like them to, just because I see Lightning, Lightning becoming just a different way of using Bitcoin, right? So as such, it should just be treated and should have the same onboarding and offboarding capabilities. To be honest, I'm curious to see how this gets implemented. But to the extent that they can treat it as just a standard Bitcoin transaction, the way everyone's already used to treating it, that should be beneficial for Bitcoin as a whole.
Yep, agreed. Very cool. Murad, looks like Murad might be busy for a second. So maybe we'll ask you, Murad, are you back there? Let's see.
Yeah,
if
I'm
he
right
did.
here.
All right,
I'm
cool,
right
man.
here.
He's back. Zamir, so let me ask you, what do you think about the discussion so far? What do you think about this Thor service and more and more services being built on Lightning?
Yeah, Thor's very exciting. I'm actually extremely excited about Lightning as a whole. The more I just learn about it, I've sort of been studying up on atomic multipath payments and splicing a couple of days back, and I'm just realizing that it's like a whole nother universe. It's I like to describe this whole thing as like an upside down pyramid, where like the base layer blockchain is like this titanium, like very dense, very high secure thing at the bottom, and there's just going to be a whole like layers on layers of like fascinating things being built atop the Bitcoin blockchain. It's almost like sometimes it seems to me that it's going to be Lightning that's kind of going to be the next internet, where the Bitcoin blockchain is more of like this like a layer where occasional truth sort of gets returned to. But yeah, it's just totally fascinating. The momentum with which we are heading into 2019 is just incredible. And I think Lightning and its usage in terms of Bitcoin is going to be, I'm realizing lately, a very big moat in and of itself for Bitcoin when competing with other currencies, in the sense that once there's going to be a ton of actual Lightning usage and a ton of Bitcoin being essentially inside Lightning channels and essentially staked on inside Lightning, it's going to be harder and harder for other cryptocurrencies to compete. And in and of itself, sort of the development of Bitcoin specific Lightning technologies and Lightning infrastructure will increasingly make the vast majority of other alts irrelevant.
Do you happen to see Lightning as like this interoperable sort of maybe application layer that all these other alts can connect to as well, that maybe will provide liquidity between them, or other useful scenarios that we can come up with in the future that would require atomic swaps and things like that? How do you see that playing out a little bit?
Yeah, definitely. I think that at this point, I'm so bullish on Lightning and everything to do with Lightning that I think for any kind of altcoin to even hope to compete, they would have to, or even hope to stay partially relevant, they would have to be able to sort of plug into Lightning technology and have Lightning be extensible on their blockchain layer as well.
Very interesting. All right, let's go back to John. John, what are your comments on this discussion so far? I mean, do you see BTC LN, right, as the new TCP/IP? How do you see this playing out? And after that, I actually want to just ask you a little bit about how Thor came to be, because I'm kind of curious about that origin story. But first, go ahead and answer the Bitcoin Lightning.
I wasn't there for the Thor origin. It
okay.
was conceived before I joined the company, but in general, like I said before, that we're always looking for opportunities to be able to add new services that we can resell or provide through our Lightning node. But yeah, like he's saying, you're asking about atomic swaps across Lightning, and I think I made a tweet a while ago saying that it would be interesting to have multi-network routing, of Lightning atomic transactions and things like this, to see if these things actually come to be. But there's just so much. He's right. There's so many things that people are developing in Lightning that still have to be worked on to be part of the infrastructure. Having watchtowers come, people are talking about neutrino now, splicing, etc. And so we're keeping a close eye on all of this stuff, because we want to make sure that if there's any way that we can help be a part of it as a business, that we're there providing it.
Yeah, it's really interesting because it's hard to explain to people, because a lot of people like to do this napkin math, and they're like, well, there can only be so many transactions, or there can only be so many channels open to with this amount of liquidity at this, and so therefore Bitcoin's therefore Lightning Network will never work. But then we have all of these these amazing technologies, some of which you mentioned, like splicing. Where you can open 1,000 channels. Well, maybe that would require Schnorr, but you can open up many channels with one single transaction, and then closing a channel can actually open up more channels. And so you get sort of this sort of network effect of just never ending, channels that can be produced with very, very little amounts of transactions. What would you say to that, John?
We're still at the point where a lot of people, I think, don't even understand how Lightning works or what it really is yet. So we have kind of like this subset of enthusiasts that are like on the cutting edge of what we can do and what's coming next for Lightning. Lightning, and then we have kind of everybody else just realizing that it even exists, why it exists, what it's good for, and what it isn't good for. So there's definitely like a trailing education gap where people are still acclimating just to understanding that it is Bitcoin, that there aren't centralization concerns and things like this, that we are going to have capability to be able to not have to have a hot live connection and be online to be able to participate in Lightning. There's just there's a little bit of FUD, there's a little bit of ignorance about what it is and what it's capable of, and really I think that there are still things that we are going to find out that it's capable of. You know, I'm excited to hear when people start talking about layer 3.
Layer 3, people, that's what's next. Layer 3, layer 4. But then, of course, you got channel factories. So maybe people are already talking about layer 3. So who knows how high it's going to go. It's really, really crazy because, you know, it's funny when people start to compare, you know, Bitcoin itself, the protocol, to things like web browsers, right? Like these applications that are just so far up the application stack, it gets kind of ridiculous. But Mauricio, I'm curious to what you think about this idea that Mirai brought up as Lightning as a moat. Like, do you see it as kind of Bitcoin, like a moat for Bitcoin that's going to maybe help protect it against some of this innovation, right, that other people are making? And before you answer that, I also want to caveat that with that a lot of this innovation that I think that these other tokens are coming up with are just trade-offs, right, on security. All these altcoins, most of these altcoins are just trade-offs on various security vectors, and you know that they're calling features. So what are your thoughts on that?
No, definitely. I think, you know, there's been a plethora of projects that are trying to make marginal improvements on, you know, what they say are Bitcoin's shortcomings. And I do think that Lightning addresses that head first because, you know, the first college shots at improving it were, okay, this can be faster. And it's like, okay, well, now we fixed that. And then the other part was, you know, privacy is another big concern. Well, there's a lot of big work being done in the actual base layer and in Lightning to basically address both speed of transactions and privacy. So where, you know, as you were mentioning, you know, we continue to erode these shortcomings or perceived shortcomings and perfect the call it what Bitcoin really is and can be. So all of this is just continues to realize Bitcoin's potential, in my view, and you know, as time goes on, you see more and more truth to this whole, you know, if there is an improvement that we can incorporate into Bitcoin, we as a community will do our best to incorporate it. And so it's seeing Bitcoin act on this ethos that I think is going to it's going to basically cause a lot of people to look and say, okay, what are these other companies, what are these other projects really doing that Bitcoin cannot do either today or a few years or a few months down the run. So it's this sort of Bitcoin flexing its muscle and the community coming together to show that, hey, we did this. You know, you guys thought you had it and you thought we weren't going to figure it out, but here it is.
So let me ask you, so how I see it, I have this pinned tweet on my profile, but this is kind of how I see it, right? As Bitcoin doesn't compete with Visa or web browsers, right? Because obviously that's way layers up the stack. So Bitcoin, to me, you know, really the base completes Bitcoin as that base layer competes with base money, right? Like gold, like central banks, central settlement systems like central banks, things like that. Then you have things like Liquid that are maybe more going to compete with things like Swift. And then you have, of course, at the very top, Lightning, right? That's really going to directly compete with things like Visa and things like that. Are businesses seeing something like this, something similar? Is this how they're framing it in their mind as well?
You know, I can speak for our business, and for us, we really try to, you know, like I was telling you earlier, like what I find Lightning interesting, and just to speak to how it relates to our business, I see in Lightning the ability of doing many things and things that are beyond my current understanding and expertise. Because I would tell you, I personally don't even know the full potential of the Lightning Network. So what I have seen that does excite me, and I do think is interesting, is this idea of, you know, as this matures, the idea of being able for a company like ourselves to be able to open up a node and get linked up with a lot of other channels, and then start perhaps earning a return on some of the Bitcoin or the liquidity that we have taken on that. That is interesting to us because I do think that it unlocks more of what people seem to consider traditional financial services, like a place where you can park your assets to earn a return. That's something that is in I would say that's something everyone with Bitcoin would like to have, right? And would like to be able to do so with a sufficient understanding of the risk that they're taking to earn that return, right? And so we were saying earlier, there is a bit of a lag on who is leading the bleeding edge of this technology and understands and knows how to use it without taking on a disproportionate amount of risk. So to the level that companies that understand that can facilitate that to clients and create services that people actually want and need, it's going to drive more and more people into the ecosystem. So I do think that's going to open a world of opportunity, and the companies that are at the forefront looking and kind of developing this product and kind of bridging the gap between the people that want to use it but don't have the education and what the actual network can do. So I think companies like ourselves are going to play a huge role in bridging that gap and educating those people.
Awesome, awesome. Yeah, it's going to be up to the companies, right? Like John's company, yours company. These are the people that are going to be public facing, and so it's up to you guys to kind of do a bulk majority of the education. So that's really great. Mirad, go ahead and close us out on this topic. What are your final thoughts on this, on the discussion so far? What do you think? Because I really loved your moat comments. Go ahead and finish this topic off.
Yeah, I definitely agree with you that the base layer is competing against central banks for money issuance, and perhaps also like Bank of International Settlements for final settlement, for like high value final settlements. But so, which it leads me to kind of thinking, if Lightning is indeed pluggable into every, let's say if Lightning is pluggable into every cryptocurrency, then is it Bitcoin's liquidity that's going to protect it from competition? Is it its sort of brand recognition, or size and price stability? I think, and this might sound a little bit taboo in front of sort of Bitcoin ultra maximalists, but I think that for the time being, there will probably be 3 or 4 dominant chains as opposed to just one, even if hyper Bitcoinization is something that we're going to see in the far future. I think investors are, yes, these things aren't stocks, they're currencies, but I still think investors will diversify into a small handful. And if blockchains were payment networks only, without the money part, then I think sort of the TCP/IP metaphor would be more relevant. But because they are sort of value pools as well, I think if you understand investment management and what people who really control billions and trillions of dollars will do, I think the market for stores of value and monetary instruments, which is like 100 trillion or more, it's just too big for just one. I mean, I think at least for the time being. But
I want to get a chance to rebut you on this.
Okay, no problem, John. No problem. We'll get you in there. But are you done, right? Or
yeah, that's pretty much.
Okay. So before you comment, John,
I knew Carvalho would hate this.
Of course. Now, listen. I think that before John comments, I think that we all probably mostly agree with that for the short term, because obviously you're not saying that's how it's going to be forever.
Yeah.
But for now, I mean, and maybe possibly a decade, maybe 2 into the future, because there, as you say, there's hundreds of trillions of dollars of assets still that has to be pumped into Bitcoin, that has to be put into Bitcoin at some point, that will eventually find its way into Bitcoin as it's inevitable because of this, the finite limit, the store value. So in that time, that could be 10 years or whatever, not everybody is going to understand the difference between Bitcoin, EOS, and Ethereum, right? It's just that kind of, that's asking for humanity maybe a little bit too much, but that's why, we try to have education. So John, I want you to comment on this as well. I mean, don't you think that we're going to have, there's just so much liquidity. It's just so early, just such this information asymmetry. Don't you think that all of that will lead to multiple coins for a while? And of course, the digital gold still being Bitcoin.
Yeah, I just basically wanted to put this in perspective by flipping it backwards. I'm not somebody who is going to live in denial and say that altcoins shouldn't or can't exist. They do exist, and they are serving a purpose. But I want to take what you said and flip it around and basically say, you said, oh, how will Bitcoin survive and compete if it becomes interconnected with these other things and they're offering similar uses? Well, first of all, none of them are connected yet. And second of all, how will they compete with Bitcoin? That's why they will interconnect, because the only way they'll stay relevant is if they connect to Bitcoin. And all of these altcoins, they only can persist in the light and in the context of Bitcoin. So they're always saying what makes them different about Bitcoin, why they why they might be able to be something that can compete with Bitcoin. And all of the interest they're actually getting is purely speculative, in my opinion. So people are just looking for a way to buy Bitcoin yesterday, like I've tweeted recently. I just think there's mostly what they want is they want the chance to have bought Bitcoin when it's cheap. And that's what gives them their main motivation for being interested in these technologies. And then everything just builds on top of that. The developers justify spending time on an altcoin instead of Bitcoin for this reason, etc. So, you know, this interconnectivity, even if we do get Litecoin connecting to Lightning on Bitcoin and all of these things, it's only what it's going to be what it takes for the altcoins to stay relevant. Bitcoin won't have to worry about competing. And as far as all of the money that is still to come or looking for where to put it, yes, it will continue to bleed into some of these more speculative coins, but it's only because those people will feel like they have an added advantage from a risk management standpoint, where they can say they can get a higher risk ratio by betting on something with a lower liquidity. But in the end, the convergence on one coin, treating Bitcoin as the Schelling point, as something that everybody agrees on, is always going to bring maximum efficiency and maximum gains in buying power the more people cooperate on one network. And so eventually people will realize this. Will we get hyper Bitcoinization? I don't know. But I think that the more people have confidence in sticking with Bitcoin, the more they realize that it's the right choice.
Yeah, and I want to hear what Murad has to say real quick. But I mean, that's a good point, because obviously the basic premise of Bitcoin hasn't changed in 10 years, right? It's still the same Bitcoin. So despite having 10,000 more alts, we technically, you know, the main value proposition of Bitcoin is still there, this digital scarcity, right? And that's not going to go away. So Murad, I'll let you go ahead and comment on that, because I thought that was a good point that John had.
No, I think that what John is saying is definitely real in the long term. And this is going to sound, but I think by this time, after the next boom and bust, say 4 or 5 years from today, I think Bitcoin maximalists will once again genuinely be the most ethical, moral, upstanding, and principle. But if you are going to be holding exclusively Bitcoin going into sort of the next hype wave, you will also be the person who makes the least money. And yes, you will be directionally correct of planet Earth of 40 years from now. But I believe that since 99.5% of the world still isn't here, and all the quasi-smart money with their big egos, they will always try to outperform. So precisely these illiquid coins pumping way harder than Bitcoin is almost like a self-fulfilling prophecy. And just to me, it's like sitting on the sidelines while people who will just get into the space in 2021 and get like 300x returns while just only holding Bitcoin. I don't know if that's sort of the most optimal behavior.
Right, and a lot of good points on there. So before we talk a little bit more, this actually leads into our next topic, guys, that I kind of want to discuss, which is, you know, trying to find what you guys are trying to find, what tools you guys use to measure Bitcoin's value, right? So I want to know what you guys think, because this discussion was actually sparked from a Twitter thread, and I found some very interesting some very interesting responses in there, and I want to get them because both John and Murad, you guys both participated, so I want to get your guys' comments on this. But before we do that, let's go ahead and let everybody know that of course you can find us guys on CryptoCast.network. We do this show, guys, every Sunday, the Bitcoin News Show right here. We really appreciate everybody joining us. If you guys like the show, really appreciate it if you give us a thumbs up. If you guys are new to the show, please hit the subscribe button. And of course, you can always find our audio stream, guys, there on iTunes and RSS right on our website, CryptoCast.network. So now let's get into this. Now, before you respond, I actually want to give Mauricio a chance here, because Mauricio's sitting there. I'm sure he's got something to say. I want to see what his thoughts are. This topic kind of brought about again from this Twitter thread, and you know, there were some interesting answers. But let me ask you, Mauricio, what do you use sort of to measure day to day, maybe year to year, the value in Bitcoin? The value of Bitcoin. Sorry, go ahead.
Yeah, I mean, listen, that's a great question. I think, you know, for us, as we're evaluating Bitcoin as an asset to take as collateral for an asset, you know, for lending, it was we went through some really interesting, I guess, experiments in our models and trying to see, because, you know, we have our own idea, and I have as I lived through the use case in Bitcoin firsthand in Venezuela. Like I actually saw people that were trying to emigrate the country with a chain and gold and some dollars cash get actually pulled over in the Colombian border and get the gold taken away and get the cash taken away. And so when people say, you know, oh my God, is Bitcoin really helping Venezuelans? They're surprised when someone like me says, hell yeah, it is. You know, like you don't know how many people are actually crossing borders with keys, you know, stored somewhere rather than taking assets. So it's a very interesting debate every time you try to ascertain Bitcoin's value, because people always gravitate to price, and price seems to be this, you know, price and volume are these two, you know, kind of like the holy grail of the asset's liquidity itself. And I look at, you know, I see some of the work that Nick's done at Coinmetrics, and they do some really amazing job at really trying to get these indicators. For me, you know, I like the NVT, this idea of the transactions relative to the exchange traded volume. It's a really good, call it heuristic, I would say, to call it to measure the temperature on the network itself. But outside of just trying to keep a really close eye on how people are trading it, which is really the biggest forum where people express their content or discontent for where the asset is right now. I would like to tell you that we are, you know, that we don't live and die by price and volume, but unfortunately, that is really at the end of the day what is going to make our investors whole. So we really have to follow just the trading volumes, and for that, just to get a little bit deeper on that, we try to not follow any of the exchanges that don't have what we call legitimate on and off ramps for fiat. So we really try to follow exchanges that have legit KYC and AML, and that really are the guys that are trading real dollars for real Bitcoin. Because the altcoin volumes and the Ethereum to Bitcoin pairs and those kinds of volumes, we really try to stay away from those because those can be much easily gained. So we try to focus on really the most strict exchanges as far as really trading dollars for Bitcoin.
Okay, that's some good responses, because, you know, we actually did, just so the audience knows, we did switch this topic with the Wall Street topic, because I just didn't really want to talk more about ETFs being delayed and things like that. So I thought this was much more valuable. You know, how are we measuring the health and progress and the value, you know, of Bitcoin? So you gave some really great responses there. Let's go to John. John, what do you think about this topic? How are you measuring, you know, the actual progress and health of Bitcoin? Is it just price, or is it something more?
Sure. My feelings are similar to his. You know, the person who made the tweet asked for what metrics specifically we would use. And, you know, what I've learned about Bitcoin in the past couple of years especially is that what it's really good at, and this is how you know it's working, is that you can't really measure that many metrics with much confidence or objectivity. So I do revert to using price as the best metric for measuring its success, because the price, any of the metrics you can think of, any of the qualities you can think of that are representative of Bitcoin's health or success should be priced in. Now, this price may have volatility and delay or some amount of inefficiency to it, but generally speaking, there isn't anything more effective in pricing than a market. So any amount of success or advancement in Bitcoin should be priced in, if not with some delay or inefficiency. But I would say if we could measure decentralization, or we could measure censorship resistance, which is pretty much going to be a function of decentralization, I would say we would use those metrics. The closest thing we have is hash rate, I guess, but then we can't measure the quality of hash rate very well, so it becomes difficult. And to kind of extend this into what the previous conversation we were having, liquidity is a big aspect of price, which he was just mentioning, and the liquidity is the important thing I think that shitcoin speculators are forgetting. Yeah, if you hold, you know, the right shitcoin for the right 3-month period, you may get 100x, but you know what? You're going to be one of maybe 1 to 5% of the people holding that coin that is actually able to realize that liquidity, and then the rest of them are going to see a 95% drop like everybody saw this year. Yeah, sure, Bitcoin dropped a lot too, but the altcoins dropped a lot more, and the difference is that when you're not when you're not the king, when you're not the one with all the network effect, you're not the Schelling point, that liquidity doesn't return. All of these shitcoins that have dropped 95%, they're going to have to compete with the next round of shitcoins. And so it's not to believe that if you diversify into altcoins that if you don't do so, you're going to miss out on a 300x. This is the pitch they want you to believe so they can get your liquidity, so they can get the fuck out at 300x. So that's how I see it. You know, yeah, if you're lucky and you're really good at your trading game, maybe you will be the guy to make more gains on Bitcoin, on an altcoin than Bitcoin. But in the end, you go and ask all these altcoiners if they have more Bitcoin now than they had before, and you tell me if you can find more than 5% of them that say yes.
Yeah, it is interesting. Obviously, you know, the advice is relative, right? For person to person, it's a case by case type of basis. And it's funny because, you know, when I answered that, I answered in that thread, right? I answered like 5 different points, right? You know, the trend and aim towards decentralization and censorship resistance, right? The quality of the developers, things like that. But you know, at the end of the day, as you say, most of that hopefully does get priced in over time. So I want to hear Murad respond to this now. Murad, of course, you are a pretty good trader. At least your charts, your TA seems to be on point from what I've seen. So you know, this of course is almost completely different for you. You being a trader, you will probably be in that 1 to 5%. But what are your responses to John?
Yeah, I definitely don't recommend particularly of illiquid, hyper volatile shitcoins to sort of my friends or for people who ask like me, like what to do. And I almost always recommend for people who just want to sort of throw money in and forget about it to put at least 70 or 80% of their portfolio into Bitcoin itself. Now, he definitely raised some good in this sort of trading game. I suppose most people will lose and many people will, and a small number of people will gain. But personally, I think I will try to sort of compete in that arena, I guess. And to be entirely honest, I think even though even though 99.9% of altcoins are completely worthless and scams, I still think there will be maybe half a dozen or 3 or 4 coins that will increase in value in the coming years for more or less legitimate reasons. Whether you like it or not, once again, I think sort of ultra high net worth individuals and institutional investors, I think they will probably invest in 2 or 3 store of value candidates. Once again, even if Bitcoin's dominance is 75, 80, 85% sort of in that bucket. But I just think that at least in their minds, there is still, because this is not like a physical object like a stone or gold, and this is hybrid money software built by people with sort of potential for bugs and certain problems, etc. As mild as it might seem to actual Bitcoin experts, I think the investment flows will sort of protect their own anxieties by like quote unquote diversifying a little bit. And if my theory is true, then we sort of can take advantage of these sort of human behaviors. I mean, of course, this is more high risk, high reward than simply holding Bitcoin. But I guess if you think you know what you're doing, you can play that game. But yeah, like once again, I would still, if you are a bystander who doesn't want to get into the weeds, I suggest putting at the very least 75% of your portfolio into Bitcoin.
Yeah, yeah. So great response, and that's kind of what I figured, right? I mean, it is going to be. We are such early days. There is so much liquidity left to come that it's kind of course people are going to not fully understand Bitcoin to be able to just put everything into Bitcoin. They're going to not research, and they're going to choose to not do as much research and instead put it into a few things, right? So unfortunately, that's just how investors think. That's just how most of these people think, and of course, they've been trained from Wall Street, right? Which is diversify, diversify, diversify. Pretty much is what their mantra is, right? So so interesting metrics that we're using here to measure the health and progress of Bitcoin. There's all sorts of things that we can get into, but I do want to get into the next topic here, guys. So let's start with that. Mauricio, let's start with you on this one, because I wanted to get this kind of a little bit of a debate going on. I just wanted to see what you guys think, what the panelists think, because this discussion was a bit on Twitter. Again, more people are starting to talk about this, and so I wanted to see what you think, Mauricio. the question basically is, should we use altcoins or liquidity from altcoins or profits from altcoins, to help fund Bitcoin infrastructure? So I want to get your thoughts on this. What do you think?
Yeah, no, that's a great question. It's something that I've been thinking, a lot about, and just so people get a sense for what we do, we underwrite Canadian dollar loans to people that post Bitcoin as collateral. And so being in Canada, particularly in Toronto, we do receive a lot of interest from the Ethereum community. And we've received inquiries from all sorts of people that hold all sorts of coins that would like to have these types of services for their assets. They're not Bitcoin, but they would still like to access the same kind of, liquidity type that we offer for Bitcoin holders. And so there are several challenges when you're thinking through that, because as a financial services company, we really like to think that whatever product we are offering is helping our clients, right? So, for example, if we are, putting ourselves in a position where we're taking an asset as collateral for someone to take a loan, but we don't really feel like that asset is going to hold up its value for a foreseeable future, and that client is going to come out with a bad experience, he's just going to have a bad experience with us as a company. So for us, it's a lot of the stuff that we would like to do, we have to make sure that it fits and it goes in line with where we want to take the company and the types of products and services that we want to build. To Murad's point, it is important for us, and once you start working in a company, you're getting this, you have to put the hat on of, okay, how do I make people's lives better? Like, how do I help clients, right? And so whether there may not be a challenge or an issue for us to take Ethereum as security and issue somebody a loan, we're going to face pressures, right? We're going to face pressures from the people that say, hey, that is the right thing to do. You should earn that profit so you can keep funding more work for the things that you want to do and carry forward. And then there's going to be a few call it, you're going to have to make a moral stance where it's like, is that something that I want to do? And is that something that's really going to benefit my client? Now, to Murad's point, I think it's still too early to kind of say no one else is ever going to like altcoins, right? Because like he was saying, there will probably likely be next waves. These type of promoter, founder type people will get some people excited, and FOMO is going to kick in, and people are going to start buying it, and you're going to see bigger multiples in some opportunities than you probably do in Bitcoin, because Bitcoin, as it goes bigger, it gets harder and harder to move. And so there's going to be too much FOMO and too much, shining lights going around for people to like get distracted. So it's challenging, and I love to see what John says about this, because companies have this kind of two sides of pressure, because you're facing pressures from both sides. As a Bitcoiner, and I saw the benefit that Bitcoin had in a society in Venezuela, and so I know its value, and I know that whether it's price or volume or whatever it is that I'm following, I have this idea that it's helping a disproportionate amount of people, and that alone is going to push the project through. So I'm blindly confident in our ability to take Bitcoin as an asset to treat as collateral. The other assets have to go through a massive list of checks and make sure that this is actually going to fit in and it's going to be a win-win for everybody before we can actually treat it as something that we work with. But I think it's important to separate, the pressures that a company faces versus the pressures that you face as an individual, because I think you're in two different camps when you're trying to make this debate, at least as part of contributing to this debate.
Yeah, and it's interesting because, at the end of the day, markets, right, they're just psychology, right? And human psychology exhibits patterns, right? We see these FOMO things, like you said. It's crazy. We saw the .com bubble, we saw ICOs. FOMO can get crazy, and people see shiny lights, and at the end of the day, people have 40-hour jobs, and they're not going to be able to to really do the research that it takes to learn about all of this stuff. But let me ask you, John, what do you think, man? Do we give into the pressure of clients who want these other coins for their business, and use that benefit to benefit Bitcoin, or do we just take a hard stance and say we're just literally not going to support any altcoins?
Well, I think we're talking about two topics here. One is the concept of the risk exposure to altcoins in the context of lending, and the other one was what you mentioned as far as funding development through altcoin ICOs or such. To talk about the lending aspect, I really liked what he was saying, because I've seen a few different lending entities come and go in the 6 years that I've been in Bitcoin, and I remember BTC Jam, and I also know some people that were big users of Salt lending, Eric Voorhees's project, and those things and a few other stories I've heard of personal lending stories have led me to basically the stance that I think that loaning Bitcoin and lending Bitcoin are basically the most dangerous things you can do with Bitcoin. And so I like to hear somebody involved in that arena being very, very careful about who he lends to, how he lends, what he accepts as collateral, what he allows people to buy maybe with that value that he's loaning. I would never want to see somebody buying an asset that I wouldn't be willing to take as collateral if I want sustainability of my lending company. So if he wants to last, he should continue that attitude. Be very careful about allowing people to give collateral that may just vanish in value. And really be thinking about the long term of his customers being able to actually fulfill payments on these loans and come back and take out new ones. And that's going to be what's important for that business. In regards to accepting raising money for development through altcoins, I think the incentives are not correct. I do not think it's a good idea. I could elaborate further, but just generally speaking, what you're basically saying is you want a donation, and you want people to be able to, you want to allow people to sentimentally trade and speculate on their association with that donation. But there's actually a complete disconnect to donating to somebody to do development work that is somehow supposed to help Bitcoin, and then issuing some kind of token that's supposed to have some kind of value towards that. The incentives aren't proper.
Yeah, before Mauricio, before I let you respond, I just want to say, speaking of Ethereum, of course, we have to wear the Ethereum shirt, because in honor of their hard fork, we got to wear the Ethereum as a security shirt for the audio listeners who can't see. But I think that's another debate we're going to have at some point. Still, I don't think that debate is over at all. But I'm going to go ahead, Mauricio, and respond, because I know I believe you guys only actually lend fiat and actually use the crypto as collateral. So it's a little bit different there. But go ahead.
Yeah, no, I just wanted to clarify. So I completely agree with you. I think, borrowing Bitcoin or lending Bitcoin is an extremely dangerous proposition, just because I grew up around hyperinflation. So I saw a lot of people in Venezuela borrow dollars when they were earning bolívares. And that trap, my man, is a trap that you can't fall out of, because it's really, really difficult to pay up. You can't borrow with something that is going to appreciate, right? Like nobody wants to borrow something that's going to be harder to pay down. Like the whole idea of this is you're borrowing fiat, which is by design getting weaker and weaker every year, and you're buying an asset, and with it you're using it to buy an asset that is not getting built or is not getting built at the same speed. So it creates this potential for this virtuous cycle of borrowing, meeting your obligations of borrowing again, because you higher asset base, you can borrow a higher amount. So it's kind of like a real estate play on if you want to call it that. You can think of it as a mortgage for your Bitcoin, as you do a mortgage for your house. I mean, it's again, there are debates around how you want to qualify housing as far as a good. I like to think of it as you're borrowing something that is very easy to produce or produce at a high rate, and you're using it to buy something that's very difficult to produce and produce at a very slow rate, right? And so, in the long run, these two ideas should play out, and it should feed into itself, right? And so that's why I'm very comfortable lending people fiat if they give us Bitcoin as collateral, because of the way those two things are designed. The opposite is something that we are not into yet. We have had some interest from, call it, institutions that are looking to borrow these types of Bitcoin really and other securities, or no, I call them securities, but call it tokens or altcoins that they want to take a short position on, right? And these guys are way more sophisticated. So to the extent that we can go and say, hey, we're going to let you take this short position, but we're going to over collateralize your short position by this certain amount or certain pool, and then the second you get close to that, we cap you out, and that's it, and you're done. So it's really the idea of understanding your risks and making sure that you can realize on those scenarios where you could be potentially at risk. So anyway, that was just the short part. I think what John said was right.
Great comments, great comments. All right, let's go to Murad. I know he's probably chomping at the bit to jump in here. So what are your thoughts on the discussion so far, Murad? And what are your thoughts on, using altcoins and the profits and, things like that to go ahead and fund further Bitcoin infrastructure?
Yeah, I think, of course, this will never get implemented because sort of Bitcoin and its value proposition as digital gold is probably benefits from the fact that it is extremely hard to change. But I actually don't think that 100% of the block reward going to miners is necessarily the best thing. Because when I see things like Luke Dash Jr., who is, just from what I gather by talking to people, is just one of the most intelligent Bitcoin Core contributors, and him having to sort of beg for scraps on Twitter for Patreon donations so that he can work on Bitcoin full time. Bitcoin, which is like a multi-dozen billion-dollar asset, is just doesn't make sense to me. But yeah, frankly, I think if maybe, I don't know, 1 or 2% of the block reward just went to like the developers able to work on the project full time, then maybe the cryptocurrency revolution would just go on, just happen even faster, because you could get so many brilliant minds working on this stuff full time and just accelerate it into just absolute critical mass. But yeah, I think in that sense, alts are definitely testing grounds for Bitcoin, because I think less so in terms of funding. I always thought about it in terms of alts can do more risky experimentation, which Bitcoin can just quietly stand in the corner of the room and see whether something like that is useful or not. At the end of the day, I believe that if any altcoin comes out with a truly useful technology that is truly revolutionary without sacrificing security, Bitcoin could be able to adopt it. But yeah.
Yeah, great. Some good points in there, because we have seen, of course, people like Luke have to ask for some money on Twitter. We've seen also, of course, contributors to like BTC Pay Server, right? Like have to create funding campaigns. But at the end of the day, one could argue that the incentive structure is kind of already there, baked into Bitcoin. If you could just somehow earn Bitcoin and get enough Bitcoin, and eventually you would be okay. That's kind of sort of what most, I think, of the Bitcoin core contributors and other developers into Bitcoin probably mostly think, because in my opinion, I think that any type of percentage reward immediately gets centralized, right? Immediately creates a single point of failure, because that money has to go somewhere. So maybe if it could go to some kind of sophisticated DAO, but that's decades away, right? So it would have to go to a single thing, right? And that single thing is that single point of failure where that money gets allocated to. So it's going to be tough, and it really is tough to see some of these great contributors, like to BTC Pay Server and like Luke Dash Jr. It's tough to see them have to create these campaigns. But at the end of the day, the best thing you can do, of course, right, is to educate, is to help, is to contribute a little bit, is to help people get aware of these types of these campaigns that are going on, because Bitcoin has always been and is at its strength a grassroots, right, with no leader. That is the benefit of Bitcoin. That's the best thing about Bitcoin, and I think Luke would agree. And I don't know if even if Luke would have it any other way, to be honest. But let's go with John. Comments on this. What do you think, John?
Sure. I mean, yeah, I think that Luke is a very talented developer and a smart person, but I also think that he could get a job. I think that people would be willing to hire him, and there are companies existing that are looking for people to specifically work on protocol developments for Bitcoin, working on Lightning, whatever it may be. And I think that Luke's situation was more of a personal preference, and there was probably a little bit more to that story than we realize as to why he chose to put his hand out instead of send a CV to his favorite Bitcoin company. I don't know the whole story, but in the end, I think the incentives don't work any better to have, even if we could change Bitcoin to automatically give 1% of block rewards to developers somehow. You can't put you're basically extending the governance of Bitcoin to be extra protocol, and that fucks up the incentive structure entirely, even at any percentage. So the design is elegant as it is, and what we have to figure out is getting Bitcoin into the hands of developers that we want working on Bitcoin, so they're exposed to the Bitcoin appreciation and buying power over time. Eventually that will stop too. Eventually everybody that ever wants Bitcoin, ever needs Bitcoin, will have it eventually. So I don't really know at that point how it goes with development, but maybe Bitcoin doesn't need to be developed and extended forever either. But we already see it. We already have the examples of people using an altcoin to raise money for development. What happens? They become biased. They create narratives against Bitcoin, and it works counter to Bitcoin. It doesn't help Bitcoin. And really, the examples of an altcoin developer and being more experimental and taking more risks on an alt chain, the examples of that actually influencing Bitcoin or the blockchain technology as a whole are few and far between. There aren't very many. There are some. I will say there are some that there has been some influence to Bitcoin in a positive way from altcoin development time. But these are things that probably may have happened even sooner had the altcoins not taken attention away from Bitcoin in a development standpoint. I mean, imagine if even 10, 20, 30, 40, 50% of the investment money that's gone into altcoins and promoting altcoins and paying altcoin developers, and that developer time had even just a percentage of that had been put towards Bitcoin instead, where we might be in the Bitcoin development phase. So no, I don't really agree. I don't think that creating a sentimental investment token for people to have an excuse to donate to a developer is a good thing. It's deception, because you're making these people that buy these tokens think they're getting something more than they would if they had just donated that money to Luke.
Yeah, it's interesting because we've seen the blockchain camp actually do a lot of education for us, right, on Bitcoin. So we've seen some interesting plays there. But I'll let you respond, Murad. Like, what do you think about this? There seems to be many routes to take. Like, for example, the Jimmy Song route, right? Like being able to, if you're a developer who's not making enough money, maybe make a class or a course or write a book about what you know, and see if that works. Go ahead. What is your response, Murad?
Yeah, it's tough. There's definitely various things Bitcoiners can do. Mm-hmm. At the end of the day, I think the number of jobs by companies who are willing to hire Bitcoin developers to work on the protocol itself is really quite limited. And like even I think Zappo has a couple of others have a couple, but like even Coinbase, I think it has like 1 or 0 at the moment.
It had one, and it just lost its last one.
Yeah. In any case, I do think that some kind of a maybe not for Bitcoin, but in some kind of a DAO, which could do all of this sort of in a clean way, that would be pretty cool. But yeah, I mean, that's pretty much it.
I mean, the ideal situation is, of course, to have this done autonomously, right? Like buy software one day. That would be great. But we, of course, know that that's years away. We've seen what happens with the previous DAOs. I do think that will come to pass. One day we will have real, right, decentralized autonomous organizations powered by Bitcoin. But that's just years away. We're still. John says no, but I think that it's something to strive for, to be able to like have a company in a zip file, like literally all of the payouts, all of the infrastructure, everything in software, just ready to rock and plug and play. But maybe that's too sci-fi, maybe that's too far from the future, but we'll have to see how that plays out. So Mauricio, I'll just have you close out this topic. What is your final thoughts on this topic, on this comment, or on this particular topic, and then we'll close it out.
Yeah, no, I don't really know too much details of the personal background of the decision, but I like to think of Bitcoin Core code contributors as franchise athletes, right? Like that have call it, they're approaching their end of, they're reaching retirement. So like they have this incredible know-how. They really just know how to play the game better than everyone else. They understand the rules better than anyone else, and they could really go do anything in the industry. As far as, you know, the Jimmy Song, you know, starting to take lessons, you know, whether to work on the protocol or not, you probably could find a job in most, you know, in a lot of startups that could, you know, could work with you to create a time or a schedule that would allow you to do some work for the code itself. But I do think that the world is the oyster of anyone that's contributed code to the Bitcoin, you know, to the Bitcoin code, because it's such a unique skill set to have, and you know, I think a lot of it falls in the whole entrepreneurial spirit of the coder or the developer himself, right? To kind of do the best they can with that skill set, because it is an incredibly unique. They're in an incredibly privileged position. I mean, and I went to school for business, and if I could do it all over again, I'd probably be a programmer. But you know, but I like to think that these people, or these, you know, all these guys that have done such a tremendous job, are in a very privileged position in that, you know, they just have to look a little bit deep in their entrepreneurial spirit, and they can find that they can essentially do whatever they choose to.
Yep. And maybe just let's give a shout out to Chain Code Labs. You know, some of these companies that are funding Bitcoin core development. We really appreciate it. You know, we hope that more and more companies extend at least a couple of salary, you know, at least a couple of salaries to people to be able to work full time on the protocol itself, because, you know, the protocol itself is what allowed their company to exist in the first place. So I really hope that we see more of that. You know, because protocol devs are just so few and far between. Real protocol devs. I mean, I'm not talking like Spank Chain or things like that. I'm talking about like real protocol developers, you know, that are working on these big problems in Bitcoin and Ethereum and things like that. And, you know, these cryptographers and stuff. This is not easy stuff. So, you know, usually we find that a lot of those type of level developers don't really have too much problems with funding. But then we see the application development layer, like something like BTC Pay Server, right? And we see that people, you know, would like to get funding to be able to contribute to that instead of working full time on day jobs. But hopefully, like you say, Mauricio, they can work for a company that will allow them to work on something like BTC Pay Server in their spare time. Just something we want to encourage companies to allow their developers to be able to contribute to some of these open source projects. Because look what happened with Gmail, right? Look what happened with Google. Google used to have this thing where they allowed 10 or 20% of the devs time to do whatever they want. So many products came out of that. The biggest one, of course, was Gmail. So, you know, I mean, this is what happens when you allow some time for your developers to play and to contribute. Amazing things can happen. So we try to encourage that. So that was a great comment, Mauricio. Guys, I think we can close it out. I really, of course, wish we could go 2 hours and 3 hours, but we have to respect people's time, and I don't want to waste anybody's time. So thank you guys so much for joining. Thank you, everybody in the chat. And I guess, and again, thank you, panelists, guys, so much, guys. We really appreciate it. Of course, we don't pay you guys, so you guys are contributing your time. We really appreciate the education and you guys coming on the show. John, please tell us, where can we find out more about you, sir?
Sure. You can find me on Twitter as @BitcoinErrorlog. I'm also working at bitrefill.com. So if you need gift cards or mobile refills, buying with crypto, you can do it there. And I'm also going to be doing some new content very soon around the concepts of Bitcoin businesses.
Nice, man. Looking forward to that. Definitely hit me up with that so I can help you get some exposure on that. Would love to retweet something like that. Education, guys, this is what it's all about, especially in new emerging spaces like Bitcoin. We have to, especially when money's involved, right? We have to make sure that investors and people are educated to the best of our knowledge, especially from the people that are actually in this and doing this stuff day to day. So, Mauricio, where can we find out more about you, sir?
Yeah, you can find me on Twitter. My Twitter handle is Cryptonomista. And my company's website is ledin.io. So if you just head over to the website, you'll see me on the little chat feature down in the bottom right. You can hit me up at any time.
Absolutely, man. Yeah, keep it up with Ledin, man. Keep representing Bitcoin in Canada with Francis there. We love it. We love it. Lot of development over there, and Toronto, Montreal, all sorts of places. And of course, BTC sessions, BTC Benny is over there as well. So shout out to all you guys. Then we got, of course, Mr. Murad, still one of the very few TA people that I follow on Twitter. I love your analysis, your tweets, your knowledge. Murad, thank you so much, man, for joining us for the first time. Hopefully we'll have you back on again. Where can we find out more about you?
Yeah, you can find me on Twitter at @muststopmurat.
Must stop. We must stop him, guys. Listen, I really appreciate it, guys. It was a great show. We're going to have more, of course. We have always more shows here on the CryptoCast Network, and we do this show, the Bitcoin News Show, live every Sunday at 12 p.m. Pacific, 3 p.m. Eastern. So until next time, guys, please keep talking Bitcoin. We'll see you later. Bye-bye.